Welcome to India Market Open. As we gear up for trade this morning, guys, it's a tussle between the bulls and the bears, and it's a good fight for whatever it's worth.
It's a tussle between India inflation and US inflation as well. In some sense, US inflation is behaving like the India food inflation. Let's see what happens there too.
US inflation has been largely in line with expectations. I mean, you saw global markets respond positively.
I think just easier to ignore everything and just move on.
Maybe that too. But just the fact that it's coming in like the India food inflation, just slightly higher than what people anticipate every single month, before maybe at some point of time cooling off.
Yearly, but the monthly, the Feb data in line, yearly slightly higher, core slightly higher. So those pain points that everyone is now maybe pricing in.
Yeah.
And India inflation as well. We've been living with higher food inflation for a while. But quick look at global cues, which have been good. Mood has sort of turned, at least as far as Wall Street is concerned, and the mega cap tech rally is back in force. So sharp rebound in US stocks. The S&P 500 ended up at a record close. Nvidia back in its mojo, about 7% up. We're showing you the Dow futures, but the S&P 500 was also up. Nasdaq, of course, had a great run as well in the US market. So the core of it, of course, is the Feb inflation data, as Niraj was talking about as well. So let's look at what happened there. 0.4% monthly rise in Feb was expected. 3.2% year-on-year, slightly higher than what was expected. 3.1% was penciled in. The big problem really is that the Fed wants 2%. So you're still a ways off from there. And that is perhaps where the trepidation is. A Fed extension or a delayed rate cut or start of the cycle is already penciled in. But look at what's happening with the 10-year as a result. So that has inched up definitely. 4.14% was the rate when I checked last. So that is responding in that sense to a later rate cut as far as the Fed is concerned. Just quickly want to pull up Asia, which is mixed. Not too positive cues over there. Shanghai is down, Nikkei down also because their corporate inflation has run hotter than expected. So that means they're well on track perhaps for a rate increase after a long time, might move out of the negative territory. So Asia cues are mixed as well. And I think no great direction as far as we're concerned either. Stock specific, sector specific. Overall, the worries seem to be there, whether it's concern of regulatory action or what's happening in the broader market, small and mid-cap space.
Hit the nail on the head. And here's the data, right, guys? Just look at the Tuesday return or the Friday return for the key indices. We're not even getting down to specific stock, but just the key indices. Nifty, flat for Tuesday. Friday return, flattish, no problems there. Mid-caps participated yesterday, 1.31% lower. 2% lower on a 5-day basis, but look at the small cap and look at the SME IPO index. It just tells you the story really. 5.58% in 5 days versus flatlining for the Nifty. And then 8.23% for the SME IPO index versus flatlining for the Nifty. Even the micro cap index would have had a similar performance between the SME IPO index and the small cap index. So that's where the pain seems to be, that the broadening of the spectrum, and which is why maybe portfolios are hurting. I mean, I don't know if you guys have spoken to any dealer or any person that you speak to off late. The conversation is just that there's just this lack of buying, which is leading to pain in the portfolios somehow.
No, and the thing is, on the way up as well, there was underperformance on a lot of these portfolios, right? But for some obvious reason, on the way down, it's portfolios that have a higher sort of reaction to these small and mid-cap stocks selling off. But I think the good news is passive funds in the large-cap space might actually finally start doing well again, because that was the trend
up
until a year ago. And talking about IPOs, look at how disappointing RK Swami's listing was yesterday. There was some euphoria around that one, but given the larger market sentiment, the stock debuted with a 13% discount. I haven't seen, and I'm calling it disappointing because not too many listings in the recent past have been as disappointing.
sell action. That was expected.
That what you're attributing it to?
The wind has been taken out of that sale completely.
And I think there are some concerns regarding maybe working capital, maybe competition. R.K. Swamy also comes from a space that's not often seen in the listed space. It's a marketing company. Also, apart from that, a quick mention of Bharat Investment before I toss it back to you. There was so much excitement and euphoria around this InvIT, and for good enough reason. I mean, the yields there are genuinely attractive. It is definitely a product that gets recommended in a whole bunch of portfolios because of the regular income and appreciation that investment opportunities like this give. But Bharat InvIT as well listed pretty flat. 1% high is where it opened. Finally went home with a 3% gain. But I guess we shouldn't be complaining. Given that the larger market wasn't doing too well, this one had it okay, I'd say, at best.
Yeah, and probably will be steady because as an InvIT or a REIT would go, they will not have really large moves like a real estate space would. But, you know, frankly, just the lack of buying, just exacerbating the kind of impact that small volume selling as well. Yesterday I was talking to a broker at a cafe, was talking about how volumes at his brokerage have just kind of disappeared. I mean, people are not coming out to buy, and I think therein lies the problem at the broader end of the spectrum, because some of these stocks are not very expensive, the growth stories are promising, but there is no buying, and therefore small degree of selling leading to the kind of falls that we've seen in some of those.
Very quickly, Niraj, if there is no buying, where is this money going is what I'd want to know.
No, as in the pressure of selling.
Is it moving to debt? It'd be interesting to know.
No, just the pressure of selling in some of these stocks is just so high that the ones which have run up the most.
Profits off the table.
Very likely that would be the case.
I was going to ask which cafe.
Yeah, I was tempted. That was which cafe was this?
Okay.
You meet startup founders and market men at cafes for sure. Yeah.
Okay.
But so one, the lack of buying. Good question, by the way. One, the lack of buying. Two, today I saw in an MK note that the Naukri Jobs Peak Index for IT services has now been on a downswing for 14 consecutive months, highlighting the persistent weakness in demand. So, frankly, if you believe that this is a lead indicator, and good chances to say that, you know, hiring from companies is a bit of a lead indicator when it comes to IT services, or maybe the demand commentary, but let's assume that lead indicator is hiring, in which case, as of now, there is no lead indicator to believe that demand could be turning back on the horizon, and therefore, watch out for IT. And real estate, I'm saying this very, very consciously, that real estate is behaving like real estate. I know the line has been subbed by my editor, but real estate is behaving like real estate. And the reason I'm saying this is because it's a very volatile index, and typically performs on the upside, underperforms on the downside in a big way. And that is, I think, what's happened yesterday at least. We'll talk about that in detail a bit later on. But very likely, from whatever little I hear from dealers, likely to see buying at lower levels. So watch out for this index as well. 3.5%, really deep blow, right on the chin. Let's see if it recovers.
That is the Realty Index, 4% cut. So there's a big, big sell-off in trade yesterday. A quick word on inflation before I talk to you about all the stocks you want to watch out for. Inflation number, the headline number, came in line with what the street was expecting. It also came within the comfort zone of the Reserve Bank of India, which is in the range of 2% on the downside and 6% on the upside. Vegetable prices have actually gone higher despite a seasonal element here. Remember, seasonally, this is the period of time when you see a decline in food prices. What catches my attention is that core inflation continues to come off. Now, I know economists, policymakers may view this differently, but the fact that your core inflation is declining so quickly could become a matter of concern, indicating that the economy is shrinking more than one would like. So you don't really want to go into that space either. But for now, the headline inflation in line with street expectations. The April policy, the RBI, is expected to be pretty much status quo like we saw last time around. But moving on from inflation, which turned out to largely be a non-event, the market chose for it to be a non-event in yesterday. This all will choose to make it a non-event this morning. It will once again be about stocks, and again this morning, my top stock to watch out for is ITC. We talked about this yesterday. We talked about this a few weeks ago, but the fact remains that BAT is finally going to be batting out of ITC. They are paring their stake by 3.5% out of the 29% stake that BAT holds in ITC. BAT clearly taking advantage of the fact that Indian equity or valuations for some of these large Indian companies have skyrocketed, and taking some profits off the table could be the need of the hour. Well, the price band for this is anywhere in the range of 384 to 400. The lower price band coming in at a 5% discount to yesterday's close. Largely speaking, while there could be a supply overhang, most brokerages are actually optimistic on ITC, and they believe that the fundamentals remain intact, and this marginal exit or bat from ITC will only have a sentimental impact in terms of a little bit of selling pressure in the near term. But the long-term story of ITC continues to remain intact. Mutual funds, passive funds will have to go back and rejig their portfolios. So that's one more thing that we will see playing out over the course of the next couple of weeks after BAT pulls out the 3.5% stake. The stock more than likely will see some selling pressure in today's day of trade. It's down about 11% in the last 3 months, making it rather attractive for most brokerages. Well, beyond ITC, the two other ones on my list this morning are Vedanta. The quantum of number there doesn't seem too big, but the news that we have is SEBI has ordered Vedanta to pay Kane 77.62 crore rupees for a delay in dividend payment. SEBI has also gone to the extent of telling Vedanta that they cannot access the markets or capital markets to make good that payment to Kane. The stock, like I said, 77 crores is not a huge sum of money, but coming straight from their balance sheet could be a sentimental negative on Vedanta. The other one, not big news here, but nevertheless worth a mention, is SRF. This member was or has been a trader favorite for quite some time now. The latest update coming in from the company is that they're incorporating a subsidiary in the Middle East for trading in refrigerating gases. So that's SRF. You've also got one new listing. JG Chemicals will list at 10 a.m. this morning, so keep an eye out for that too, guys.
You know what I found interesting about ITC, and Samina's detailed it, and elaborated on it, is how brokerages are saying that the BAT exit is now an overhang which is done and dusted with. So that might, take that one cloud away. So you might see a good recovery
in fact,
at some point.
This was maybe 3 to 4 weeks ago when the news broke out just before market close.
Yeah.
You saw a massive cut on ITC, and I think everyone what they sold said, you don't need to worry about this, right?
Correct.
While BAT may do this, it actually means nothing. And it's not just ITC. With the way valuations of Indian companies have gone up in the last 8 years, it's only a matter of time. You've got to start booking some profits,
no
right?
wonder, yeah. And BAT has debt on its books. It needs to, sometimes you need to sell the family silver to make up. Nothing's happening with the cigarette business. The non-cigarette business is, steadily rising. So ITC will be an interesting play. I just want to put Oriental Rail Infrastructure on your radar as well. So a slew of orders, total orders of 1,249 crores from Ministry of Railways. Now, I know rail stocks are sort of out of fashion at this point, but the fact is that those order books are steadily increasing. So there's no change over there. Also, in this case, the order quantity has been increased from 2,964 to 3,055 wagons. It's a specific kind of wagon. It's called the Box NHL. It's a steel wagon, and the delivery period of the increased quantity is till August 2024. So I thought this was interesting. We should watch out for Oriental Rail Infrastructure. The order execution timeline they've been given is 39 months, and the market cap is about 1,300 crores. So one that you can put perhaps on your radar. Signature Global is another one, and we were talking earlier about real estate. The index has been hit. The fact is fundamentally that upcycle continues. So you have to watch what's happening in real estate in the broader picture of the market mood. So Signature Global has launched a new project, Orchard Avenue 3 in Gurugram. I think has quickly become the hottest destination for new launches, leaving Mumbai, Pune and Bengaluru behind. It's under the Affordable Housing Policy of 2013, and it has 235 units, areas about 1.66 acres. So this is slightly different, where the focus has been on luxury housing for a lot of players. This is a project under the affordable housing segment. And just one more, Cipla. So Cipla had a rough afternoon yesterday in closing trade. They've had a bit of positive news this morning because they've got a tentative US FDA approval for a Selexipag injection. This is, controls hypertension. But the Phillips Capital report will see perhaps some of an impact today as well. It's an important one. They have a concern of about 12% of earnings because they've gone back to Exim data, which is showing that there is no export of albuterol sulfate from their Indore facility. This is following a warning that Cipla received in November last year. And since then, there have been no exports of this particular drug, which is a respiratory asthmatic drug. They have reiterated a sell call and a target price of 11.50 on the stock. So quite a bit of downside from the current market price. And that's because if supply disruption continues, the negative impact could be up to 12% on PAT. So we have to see whether this tentative US FDA approval actually balances some of that pain on Cipla. But Cipla is a stock that I would definitely watch today.
Most certainly. Watch out for. A couple of other interesting ones today. Bharat Forge or RK Forgings or Samil or MM Forgings, any of the forging companies, keep them in mind. Industry consultant ACT Research has released an update on forecasting for the North American Class 8 truck sales. Now, why is this important? Because ACT has raised the 2024, at least, the 2024 NA Class 8 retail sales estimates to minus 9.6%. The previous one was minus 14.5%. So there is an uptick in the 2024, which is the near-term estimates for Class 8 truck sales. Because this updated forecast is on better than expected order trends over the past few months. So good order trends over the past few months, that leads to a bit of an uptick on the near-term forecast, which might be construed positively for some of these. Because as per a Morgan Stanley note, Class 8 segment contributes to about 16% of Bharat Forge standalone, as well as 7% of Samil's, which is Samadhan Motherson's consolidated FY24 top line as well. So this is meaningful, guys, for both of these and the others. And it'll be interesting to see whether this is a dependable statistic and whether the companies themselves are seeing some bit of an uptick or no. Because I remember back in 2023, MM Forgings was first of the block saying that European Union replacement demand will ensure that forging demand is strong. It hasn't quite played out that way. It'll be interesting to see if a company or two echoes this, what ACT, which is the industry consultant, has said. So watch out. Maybe there could be a bit of a reaction to some of these stocks in the session today. Maybe. And of course, they've spoken about how aside of factors like strength in Mexico, etc., they have essentially decided that pre-buying or fleet buying certainly is a factor. The second one on my radar is Jubilant FoodWorks. Now, they did a con call for a post-acquisition update on the Turkish and the Bangladesh acquisition, and a lot of interest around the Turkish acquisition simply because of how the Turkish lira is behaving and how the Turkish economy is behaving. Now, brokerages have come out and given their verdict on the con call. Macquarie says that clarity is needed on growth and currency risks with markets like Turkey. And Macquarie cited a risk to EPS estimates due to continued demand weakness in India, in addition to what Jubilant is trying to do. And for most brokerages, I mean, Morgan Stanley still maintained their equal weight in the morning note, but nothing extra. MK has a sell with a target price of 400. Macquarie has an underperform with the target price of 320 relative to the current price of 445. So do watch out for Jubilant FoodWorks amongst other stocks in the session today. A couple of stocks which I thought were interesting in addition to the stocks in news that both Samina and Tamanna have highlighted. Anything else, guys?
No, I think that would be it. It's an extensive list, but lots of block deals as well, which we can eventually take you guys through over the course of the next couple of minutes. I'm
excited to know how you're breaking down the real estate story, Niraj, coming up on Editor's Cut, because the kind of suddenly sentimental turn. Is it an interest rate play? Is it a concern about demand picking up, etc.? What are we really saying?
Yeah, well, watch Editor's Cut for that. But Tamanna, you're right. I mean, it could be a multitude of factors, but maybe just the index behaving like the way it usually does, which is just so volatile. So on the upside, gains tremendously. And just comparing real estate gains to Nifty gains in 2023, far big outperformance. It was
only 6 weeks ago when the sector was at its prime, when everyone was talking about the highest number of real estate projects sold.
This is a 10-year cycle.
Likes of Knight Frank talking about how this is the start of the realty cycle. We debated that extensively.
Yeah, and we kind of talk about it, kind of a bit of a rehash, Samina and Tamanna, simply because the index fell 3.5% yesterday.
And I think it's all rotational, right? I mean, look at some of those small cap stocks. 82% of small cap stocks have fallen in the last 3 weeks. So There is pain, and I think a large part of these real estate counters are also in the broader markets where, of course, I'm going to leave it to you to
No, I'm going to leave it to Alex because as Alex would say,
what's going on here?
Watch editor's cut, isn't it, Alex?
I will start by saying that, and hopefully people are tuned in right now, and if this gets aired later, you know what this is all about. This is a conversation that generally gets you into the nitty-gritties of topics that are, buzzing. And sometimes we get into the news behind or beyond the headline. Today we're talking about realty, as was just pointed out a couple of moments back, and why yesterday's crack, or what yesterday's crack might indicate, if anything. That's one of the topics. And the other topic, of course, is ITC, where Harsh is going to talk about several aspects about this whole stake sale, which is dragged on for quite a while, and that seemingly is finally getting done. But what does that mean for existing shareholders? What does that mean for prospective retail shareholders? Should you buy if you miss the rally? Is something that we will attempt to cover. But shall we start with real estate?
Your call.
Okay, so let's start with real estate, because what a crack yesterday and a few of the stocks. But having said that, DLF still up 19% despite the crack yesterday. What are we looking at? Is this a flash in the pan?
Maybe start with that. And I'm going to time myself to 4 minutes because otherwise anchors are notorious for loving their voice.
Yes.
Okay, so here's what the stocks have done. YTD, DLF still up 19%, but Prestige, flattish, Sobhat up 37%, but more important statistic is the one-year return, right? The one-year return for some of these stocks has been exceptional.
Yeah.
I mean, look at DLF, 152%, Prestige, 190%, 153, 156, 107% for Godrej Properties. So the one-year return for some of these stocks has been exceptional. Now, and therefore, you argue that maybe real estate is behaving like real estate, which is that it is very excited on the upside, and on the downside also, when there is a first sign of caution, you would see some bit of profit booking in these stocks. You could also argue, as Samina was saying, that is delayed rate cut also coming into play here, but real estate stocks more linked to the economy fundamentally, maybe sentimentally more linked to
and a large part
rates.
of the rally took place at high interest rates.
Exactly. So which is why economy linked factors out here, right? Is real estate being a lead indicator of what the economy will do? Who knows? Let's see. But here are some stats, guys. So we're talking about whether fundamentally things are in place for real estate or no. One, home sales of India's residential property market saw a 48% increase YOY in FY23. And I have some data for recency as well, but just laying out the broad picture. Top 10 listed developers have expanded 2x the sector growth since 2017. You look at the 7 consecutive years, the top 10 listed players' growth in market share has been 2x the growth of the market at large. So clearly the listed players are benefiting. We know about it. Historically, real estate as a sector back in 2000 up till 2008 was about 7-8% of the index weightage. It's just a measly less than 2% currently. Can that weightage go up? Very likely. So, and just the last piece on the overall macro about what could India do, right? People love these data. Look at India versus China. That's the closest comparable. Hopefully, we don't end up like the Chinese property market.
Yes.
But here's some data. The GDP in USD trillion. India 2020 2.6. China was 2.3 in 2005. Expanded to 11.8, etc. Home ownership expanded in China from 65% to 85%. In India, it was at 69%. If we go to 81%, which is expected by most people, then the cycle, as Tamanna was saying, is still
Ongoing
and not ended. Now, why the fall? Clearly, I would attribute it to the fact that, one, its volatility and drawdowns are more large than the broader markets, and two, the valuations for some of the stocks have certainly inched up. So, the broad macro on your screen, GDP, urbanization, home ownership, market size, clearly in favor of this index doing well. The inherent demand, guys, is very strong. So now we bring to the recency bias, right? And just trying to figure out if there are some chinks in the armor. Look at the comparison of units launched versus units absorbed for January for the top 7 regions. I've taken 4. MMR, units launched 9522. Units absorbed 18,000.
Twice that, yeah.
NCR 1556, units absorbed 2637. Bangalore 3685 units launched, absorbed 5,700. Pune 3,800 launched, 8,700 units absorbed. Hyderabad was the only chink in the armor. The recent commentary, REITs, REIT managers claim renewed interest in office leasing. Occupiers are looking to expand. And new GCC clients are entering the Indian market as well. And we spoke about the GCC data sometime in the month of January, wherein Chennai, Bangalore, Hyderabad are just seeing some tremendous global capability centered demand. So that is on the REITs side. On the developer side, the MMR developers are very constructive because the Mumbai property registrations were up 24% in Feb.
Sure.
Same data for NCR, same data for Pune, same data for Bangalore. Tell me, where is the slowdown?
Okay, so no slowdown, seemingly based on the data that we're seeing.
As of now, nothing.
Seemingly, based on the data that we're seeing, the trend is intact. However, you pointed out yourself that despite the correction or despite the drop yesterday, where still some of these stocks are up significantly year to date, and the 1 year performance is phenomenal. So how much of that, at least in the near term, is in the price?
So that's the problem.
Is the question. So it's a valuation issue.
It's a valuation issue, maybe. That too, I'm using the term maybe my last point here because before we move on. But the fact that because the markets have run up and because there is some bit of stress at the SME end of the market or the small cap end of the market or the volatile end of the market, real estate would react this way. So there's no saying that the stocks will not go down. Possibly could. But would they see buying at lower levels because fundamentally things are still looking strong? Arguably, you can make that argument that that could well be the case.
And would that, sorry to interrupt, would that switch given that the rate cut cycle might start sometime this year?
Yeah, but as we said, Harsh, at some point of time, that's more sentimental maybe. Fundamentally, real estate growth has been linked to economic growth and not as much to interest rate cut. Because you don't buy a house because rates are up or down. You buy a house when your pocket is looking strong.
Allows it. Yep.
Or if the equity markets have been supportive when you book some profits, that's a possibility as well. But let's jump straight into ITC because it's dropped significantly from the 52-week high, which stood close to 500. It's standing close to 400 right now. And I think this cloud, some would say, of BAT selling has been going on since December last year. It's finally coming to pass. What do we know right now, and what are the implications for shareholders?
Well, first off, Alex, around 43.5 crore shares up for grabs. It's going to be largely bought up by institutions. That's what BAT has suggested in its announcement. So it's not exactly going to come straight on the market and pressure the typical retail shareholder. Institutions are likely going to pick a lot of this stake up. And therefore, ideally, the fall should be limited because there is buying support. At least this is purely from a perspective of demand supply that I'm talking about at the moment. So that definitely seems clear. So around 16.5 to 17.5 crore odd of shares which will be bought and sold. And BAT has not been generally a seller in ITC. They've consistently held above 25% since the last at least 7 to 8 years. So they've not been a seller at all. And the ITC key piece is obviously that the free float continues to be roughly 75%. Sure. So I don't think that it's really impacted the free float in a big way, and institutions are coming in any case. So from a demand supply perspective, don't see that as a major challenge, at least at the moment.
So, okay, so from the perspective of the stake sale itself, but then what do we look forward to? If we're talking about the price band, if I remember correctly, it's not too far away from the current market price, right? It goes up to what, 400 or thereabouts? Yes. So, right, 380 to 400 or thereabouts.
385 to 400.
So, it's not that far away. What do investors, retail investors, look at from this point based on the fundamentals? They've been reasonably supported. I think EPS growth also is projected to be quite reasonably strong going forward as well, Harsh.
Well, yes, absolutely, Alex. So on the fundamental side, and that's how one ought to look at it at a time like this, whether one should invest or not. Well, I've just pulled out some data. One, the PE ratio at the Feb 22 possible bottom, because the stock has almost doubled from there, was roughly 18 times. Currently, the PE ratio stands at 22 times forward, which is FY26 forward, based on Bloomberg estimates. So we've taken all analyst estimates into account, broadly 22 times. And 32 times was the top recent peak, which
That's
is
a 52-week high.
Correct, which is in 2023 when the stock peaked. So well below the peak, but very close to the 52-week low. Not anywhere close to the 52-week low. So what should one look out for when it comes to ITC? Well, the overhang is largely from a tax perspective. In case of a tax tweak, that could impact cigarette volumes, that could impact profitability for the company as well, and therefore impact your PE and EPS estimates. But outside of that, largely, there doesn't seem to be a problem on the fundamental side because your FMCG business is extremely robust, at least at the moment. They're gaining market share across segments within FMCG. Cigarette business, I won't speak about. It's a powerhouse in itself. But volume pickup in the cigarette business is awaited. So that's one thing that one should look out for. So on the fundamental side of things, things look pretty decent. 3-4% dividend yield, not a bad take home on an annual basis either. So across the board, it looks like a decent kind of a buy.
So most analysts believe that is the case. 37 analysts polled by Bloomberg, 92% have a buy, and 5% have a hold and 3% have a sell. The average target price for 12 months is standing at 503, which is very close to the 52-week high that we saw not too long back.
So not much to say, but for the fact that most brokerages this morning are saying that the supply overhang goes, so maybe.
Correct. So maybe a positive reaction. Maybe we've already seen a lot of the negative. Possibly, we'll have to wait and watch for open, of course.
So let's see what...
Alex, last 12 months, 5% returns has been very flat.
Yeah, it has been. So once again, shall we go back to ITC memes? Not yet, maybe. I guess we'll have to wait for some time for that to pan out. But let us know what you think about this conversation and what you think about ITC. We have to slip into a very quick break, but we've got more to talk about before the start of trade, so do stay tuned.
Welcome back. Let's take a quick look at the implied open before we get to the F&O piece of things. Bank Nifty expiry today, so it's going to be an interesting day. You are looking at a flattish start. Also, as you're seeing on your ticker, the BAT book has closed for ITC. We'll wait and see what the final price is at, and that'll be interesting to see. They've received sufficient bids, and that chapter, in a sense, that circle has come in. Agam joining us now for more on what to expect.
Well, it's becoming increasingly hard to determine what we can, in fact, expect from the markets, considering how things have been panning out over the course of the last few days. And, if you look at the futures data and the way things are panning out, well, one might suspect that literally nothing is happening. Because, as you can see, the underlying for the Nifty, it's flat, very little change in open interest. The Bank Nifty, the picture is, not very different. It's largely flat and very little change in open interest. But within, on an intraday basis, is where things become very, very precarious, tricky, interesting. And yesterday was one of those days when it comes to the Fin Nifty expiry. Today, we are keeping an eye on the Bank Nifty expiry. We'll talk about the Bank Nifty in just a bit, but let's take a look at how things have fared in the Nifty options market. And considering the Nifty was hanging between 22,300, 400 yesterday, a lot of that traction was in around the 22,400 calls and puts, with both of them written. And of course, on the lower end, we're now starting to see traders once again activate the 22,000 put, which means that they're seeing some amount of support around there as we move into tomorrow's Nifty expiry. Where does that leave your overall open interest distribution? Well, 22,500 call is the one with the maximum open interest. And on the lower end, we continue to see 22,000 now as the put with the maximum open interest. Does that mean that we are expecting the Nifty to move within this range? Well, not necessarily. But because we do see very, very sharp spikes coming in and out. So that's something that we need to keep an eye on. And after yesterday's day of trade, a lot of traders will be on a little bit of a back foot, considering the kind of moves that we saw both on the Bank Nifty as well as the Fin Nifty. Well, moving on to the Bank Nifty, of course, at the moment, based on max OI, keeping an eye on 47,000 on the lower end and 48,000 on the higher end. Sure, it seems like a very large range to play within. But, considering the gamma spikes that have been coming through, you never know how things can, in fact, pan out. And sometimes if you, in fact, go ahead and even sell further out of the money options, you always tend to get trapped because of that sharp moves on either side of the direction. But, moving on to stocks, well, we can keep an eye on Oracle Financial Services and India Mart, which saw longs coming through, shorts for Nalco, Kotak Mahindra Bank and DLF. And in terms of stocks which are seeing unwinding, well, ICICI Prudential and HDFC Bank. And on the other hand, looking at longs unwinding for ABB, Shriram Finance and Cummins India. That said, let's take a look at what experts are making of these markets. Well, we have Milan Vaishnav of Gemstone Equity Research who's joining us on the show right now. Milan, good morning. Thank you so much for joining in. Let's start with your assessment of the benchmarks and what kind of a structure or strategy are you playing in that one?
Hi, good morning to all. Looking at the markets, there are a couple of things that I expect to take shape over the coming days. To begin with, I expect the markets to see a stable and quiet start for today. But just like yesterday, I expect it to oscillate within a defined range and might stay a bit volatile as well. Looking at the range, I am not just relying on the options data because it does tend to change once we get into the trade. But looking at the chart and applying some classical concepts, I still feel that the incremental high of 22,525 that we saw a day before will continue to hold as an intermediate top for the market, and whatever incremental highs, if at all we get, would be very little in nature. So by and large, I do not expect the markets to see any major downsides, but in the same breath, I do not expect any major runaway kind of up moves as well. So by and large, going by the charts and taking just OI data as a secondary input, I believe that markets are likely to stay between 22,000 and 22,500 levels. And the 20 DMA, short-term 20 DMA, which is at around 22,190 or 198, might well act as a mild support on a closing basis. But by and large, I expect the Nifty to play out in this range over the coming week.
Structure are you deploying here, Milan?
Sorry, I didn't get you.
What strategy are you playing for the Nifty then?
Yeah, I would still continue to play a short strangle because I expect the markets to stay in a range. I'll be taking 21 March as the expiry, where I'll be selling 22,600 call and 22,000 put, and would be collecting a total premium of around 143 rupees. And that translates into close to 7,000 rupees, little over 7,000 rupees, and an expected yield of around 6% plus on the capital deployed. And as a risk management measure, I would exit if Nifty violates either of these two edges. I mean, if it goes above 22,600 or slips below 22,000, then I'll exit. But otherwise, I would stay put with this range.
Okay, so well, playing a short strangle as far as the Nifty is concerned. But what about stocks, Milan? I believe you have one from the IT space.
Yeah, I would be taking a bit of a defensive call here. I would be going for a call spread for TCS. I'll be buying 40 to 60 call and be selling 480 call. The net premium I would pay would be 48 rupees. That is around close to 8,400 rupees. Now, this gives us a decent risk to reward ratio of very close to 1:4, where the maximum profit potential is around 30,000 rupees. And again, here as a measure of risk management, I would place the protective stop when TCS slips below 4090. And by doing this, I'll be able to limit the maximum loss figure as well.
Okay, so that seems like a prudent strategy, and of course you're limiting your downside by deploying that debit spread and looking for a reward of 4 against a risk of 1. Milan, on that note, thank you so much for joining us and taking us through your views on the markets, as well as giving us a handful of strategies to play around with as well. And with that, it's over to you, Niraj.
Hey, thanks for that, Agam. We'll watch out for some of these strategies as well. And viewers, just remember, as I say every time, if you want option strategies, this is the segment you got to come in. Agam gets you some very pointed option ideas for you to trade every morning. So that's the long and short of this one. You know, we'll wait for some other guests to come in as well. But guys, the other interesting piece, and I know there's a Jeffries note today out there on that as well. But yesterday we were talking about this NSE cutting the transaction charges, and not that it makes a difference to traders' life unless you're an ARP fund, but the kind of impact that it had on BSE, and the stock was down, and whether did that action merit the kind of price move that BSE had, with the kind of recent uptick that the stock has seen on earnings, etc. And I think there's a very interesting note put up by Jeffries. It's one note, of course. Other people might have different notes, but it's an interesting one.
Yeah. Recall the conversation we were having with Rahul Malani yesterday, where he said that BSE was already discounted compared to NSE in terms of the brokerages. The problem is they wanted to increase it, and now they can't. So that really is where the pressure comes in. But I think
I don't know how price sensitive this industry really is. Like you said, unless you're an arbitrage player, 1%, you're not going to change exchanges to be fair. And of course, till NSE list, BSE really is the only proxy to play this industry. So I guess NSE can do what it does. BSE will continue to still grab market share and attention.
Yeah, most
at least investor attention from a trading angle of on the BSE stock.
Very much so. I must say though, NSE's share price in the private markets has also inched up quite strongly in the recent past.
Are you sure? Because I last checked 348 is what we were getting. It was available at. So
2 months ago, I think it's inched up a little bit further as well, is what I hear, but I may be wrong.
There's a wait and watch on that listing, and it has been for a while now.
Let's see. Okay, on to more news. Remember, as we said, industry consultant ACT Research released updated forecast for North America Class 8 truck market, and it raised its 2024 forecast, at least estimates, much higher than what was previous the case. Mr. Vidyashankar Krishnan is managing director at Forgings, and somebody had told us way earlier about replacement demand in Europe, ensuring that forging demand would stay strong. He joins us right now to talk about this development. Mr. Krishnan, are you seeing it in your conversations as well? Very good morning. Are you seeing it in your conversations as well, that there is a bit of a change relative to the past few months in demand from your clients?
Yes, Niraj, we are seeing a jump in interest from North American customers who serve the Class 8 truck market there.
Okay.
And they've increased their
please
schedules.
Continue.
They've increased their schedules, as well as they're talking of a stronger 2024 over 2025, over 2023, sorry.
Okay, and was 2023 very weak? Sorry, I don't have the exact handle of the numbers, but was 2023 flat or was it weak?
About 5-7% weaker. And 2024 is expected to be at least 15% stronger than 2023.
Okay. One follow-up there. So therefore, if it's stronger than 2024, what does this mean for Forgings particularly, and other factors? Because I think a Morgan Stanley note states that aside of factors like strength in Mexico that were cited in the last update, ACT has further said that this private fleet pre-buying and positioning of the EPA 27 clean truck is also being seen. Does that impact Indian suppliers?
It impacts Indian suppliers positively, and Forgings is one of them. So it's good news for us.
So Krishnan, this is Samina as well joining in, and a quick recap on what these conversations will really mean. Do you anticipate them maturing into order wins and then reflecting on revenue soon? Because I do know that you had, gone back and reviewed your guidance in terms of top line for the year, and also how is this going to help your exports start pulling back too?
Okay, first things first. We've seen these discussions with customers translating into higher schedules for the next few weeks and months. So that's turning out not just talk, but action on the ground as we speak. So that's good news. This is as far as North American, this uptick in North American Class 8 trucks is concerned. As Forgings is concerned, we are looking at about, as discussed earlier, something in the region of extrapolating what our third quarter earnings are for the year would be where we end the year at.
Okay. So, Mr. Krishnan, long story short, please correct me if I'm wrong, but had you revised your guidance downwards sometime in the last 3 to 6 months? And does this resurrect a part of that?
That resurrects, but that doesn't impact Q4 of FY23, FY24.
FY24.
It starts to impact FY25, and that's good news.
So I'm guessing you will give the guidance for FY25 at the end of quarter 4 earnings?
Sorry, please repeat that again.
You would give the guidance, formal guidance for FY25 at the end of quarter 4 earnings, or are you revising?
Yeah, at the end of quarter 4 or early of FY25.
Okay.
Since the global economy is in a state of flux, Europe has perked up a little bit for us.
Okay.
And so is Euro, so is US.
Okay.
But then overall, these two markets together constitute today only 35% of Forgings sales profile. Earlier, they used to be a huge 55%, 60% plus portion.
Okay.
So these two markets together constitute only about 35% of our overall sales profile.
Got it.
Which in turn augurs well for the company, no doubt.
Got it.
But we have to see the overall trend, particularly slightly sluggish CV market in India has also got to be factored in. With elections around the corner in India, that also has to be considered.
Sure.
So very lastly, one quick question. I believe there's a foray that Forgings is doing in the EV space. You want to walk us through what those plans are? I believe it was supposed to be calendar year 24. And when can we expect this to start contributing to your top line, if that's possible this year?
We are uniquely positioned in the EV space in India. We are probably the only company that is capable of designing and manufacturing motors from 15-20 kilowatts and above. There are no other players who are indigenous. A few are multinationals, and those are all largely with imported technology. So that gives us a huge opportunity. Having said that, we are working with customers. We bagged a couple of them in the non-auto, I would say, off-highway space.
Okay.
If I can use the term. And we're working very closely with them to expand our footprint with them. Their SOPs have been slightly shifted out, but there are there's good traction over there, literally.
Got it.
And we seem to be moving ahead with them in Q2 or H2 of this year, this fiscal.
Okay.
So there is movement on the EV space. More than that, we are also in discussion with several EV passenger car players, and that also augurs quite well.
Got it.
The interest is tremendous.
Okay, well.
Interest is tremendous. We have to translate those into hard-earned business.
Got it. Mr.
It
Krishnan.
takes some time, but we are on the job.
Got it, Mr. Krishnan. I'm sure you are, and we'll talk about this in detail when we see you in person or on video at the end of quarter 4. But thank you so much for joining us today and giving us this perspective. Really appreciate your time. All right.
Thank you, David. Thank you, Anna.
That's the view on the classic truck sales. There is ITC, classic truck sales, Zipla, so much to talk about. Let's get in Mayuresh, Joshi and Aditya Agarwala to talk about all of that. Mayuresh, I would have loved to start with ITC because I think that qualifies as the stock of the day. But you just heard Forgings. You saw the update on the classic truck sales. Is there merit in trying to buy any of the forging companies, or you would bide your time?
Morning, Niraj. I think what has gone through for the industry as a whole, I think the domestic market obviously was very, very sluggish. And the numbers 9 months FY24 have been a little bit on the softer side as well. But with the revised guidance expected to come through, I think the numbers for 25-26 will be definitely on the better side. And again, I think two important components are happening for the forging players, whether it's Bharat Forge, whether it's RK Forging or Forging as well. The entire machining capacity as a percentage, it has gone up significantly for most players. For RK Forging, as an example, it has moved up to around 74%. For Happy Forgings, it is around 84%. So with higher machining capacities being put through, and as a utilization factor, where the margins are relatively better, with expectations of utilization levels overall expected to go higher, the numbers should see a higher uptick as we head into 25 and 26. And therefore, I think with some element of recovery also expected in the domestic market post-election, specifically in the second half of this financial year, the expectation is that numbers should start coming out better than what they were in FY24. Obviously, the diversification that they are doing in other areas, railways, industrials, that should also augur well and de-risk the entire portfolio scenario from an earnings perspective. So yeah, I think that's positive news for all three players within this space.
So that's the word on Forgings, but let's get back to stock of this morning, which is ITC, as NDTV Profit broke on our ticker 15 minutes ago, that the entire BAT stake has been lapped up, sold out in the block deal window. I'm going to quickly come to you first on this, Mayuresh. Are we looking at an end of the overhang of this stake sale and maybe a positive start for ITC?
Morning, Tamanna. So to that extent, the kind of expectations that the market has now built in is that at least for the next couple of quarters, there is no additional supply that can come through from BAT. And to that extent, the kind of enthusiasm that is being exhibited, I think this is what I've been hearing as well, that there is a lot of domestic institution interest in the stock as well. I think that should augur well in terms of price stability for the stock. But going forward, I think it's really how the numbers play out. The kind of capex plans, Tamanna, that ITC has put forth, specifically in terms of new products, I think a lot of the new and free cash flows that probably come through from the cigarette business are going to get diverted in terms of the new businesses as well. And that might hamper a little bit in terms of the return ratios, at least from an immediate short to medium term perspective. So yeah, I think lapping up such a large stake by local domestic institutions should be taken positively as far as the price action is concerned. But numbers, in my opinion, would still remain soft because of the reinvestments that are happening in new categories that are happening in the next few months.
Okay. So fundamentally, perhaps, wait and watch on ITC. But as of today, at least the morning news seems positive at first glance. Aditya Agarwala, view on ITC?
Morning, Tamanna, right on the show. I believe it's come to a very good support level after the decent correction that we have seen in the stock. The 200 DMA is at 401 and stock is trading around 404. So I believe it's good support area. On the weekly chart, I see good support areas around 401 area. So with the stop loss closer to about 400, one should definitely look at ITC adding onto your portfolio for an immediate target of 430 to about 440. Plus, when markets turn volatile, usually these are the names which will give you cushion. So ITC should be one of the stocks to watch out for and offers good risk to reward them at current levels, no doubt about that.
Aditya, hi, Samina joining as well. Before we go into pre-open trade, you want to take us through your top trades this morning?
Hi, morning, Samina. Yes, definitely. So I've got a couple of buy recommendations because I believe markets are expected to open slightly higher, as indicated by the GIFT Nifty. The first is from the IT pack, TCS. I believe there's good volume-backed buying that is happening, and yesterday it was a good breakout as well from a channel. Stock is good to go long at current levels for a target of 4,300 on the upside with a stop loss at 4,130 on the downside. The second is D-Mart. Against all odds, stock has actually withheld the support areas, and from there, stock is seeing good buying action as well. So at current levels, one can actually lap up the stock for a target of 4,300 with a stop loss at 3,940 on the downside.
Right. Stay with us. We'll come back. Get ready for pre-open trade. It's going to be a morning again of a little bit of profit taking, but nevertheless, ITC is going to be the stock of the morning. So let's wait and see how that opens up in trade. Welcome back. You're watching India Market Open. We're gearing up for trade this morning. Implied Nifty indicating to marginally higher start. The stock of the morning is going to be ITC. Aditya, quick view on Swan Energy. It nosedived 20% yesterday, and it was only recently that they concluded a QIP at a price that was 100 rupees higher than yesterday's close. On the charts, does it look like a good short opportunity at this rate, at this price?
Samina, I believe we can't short the stock because it's not in the F&O space. But yes, there is more downside to the stock without a doubt. On the downside, immediate support is at 528 from what I see. And below that, stock can actually test levels of 500 as well. So there is weakness for sure. One should stay away from the stock. If you already have in your portfolio, please keep a stop loss at 528. If that is broken, stock can see further downside from current levels.
Okay, just a minute or so for pre-open. I want a quick take, Mayuresh, from you on Cipla and Pharma stocks as well. Once again, you're seeing Alembic in the news, you're seeing Aurobindo in the news, but my focus on Cipla, the Philips Capital note, turned into quite a negative for the stock. Do you see that overhang continue in today's trade as well? And would you bet on anything in the pharma space right now?
That would be a possibility, Tamanna. And therefore, I think the stocks like Cipla as an example, or Dr. Reddy's as an example, what probably comes through in terms of the ETF, Para-4 filings are going to be extremely important. On the other hand, within the mid-cap space, Natco and Torrent Pharma, if they give some sort of pullbacks and come to a reasonable pivot level as we see at Marketsmith India, might we look at good actionables. Extremely solid Para-4 pipeline. They're extremely solid in terms of branded generics. The EBITDA margins have been extremely robust, and expectations of more products coming through in the next few quarters might mean that the earning stability might continue as far as the next few quarters are concerned. So any pullbacks on stocks like Torrent or Natco can be an action.
Okay. While we're talking of pharma, the other two pharma stocks in focus today as the pre-open rates come in, Aurobindo Pharma, because the distribution of aseptic products manufactured at Unit 3, that has started by Eugia Pharma, so watch out for that one. And Glenmark Pharma, considering that the Glenmark Life deal is now done, could well be in focus today. So there is ITC, there is Glenmark, Aurobindo, the whole pharma space, Cipla, and of course then you will have other companies which have been correcting the last few days, also come into feature. So watch out for all of these in the session today. Aditya, maybe you've spoken about...
Have you noticed what happened to ITC in the first couple of seconds of
Yeah,
opening?
I'm just worried. Let's just wait for the first 8 minutes because it may not be 8.5%, but because the street was short, we'll definitely see a gap up.
Absolutely. ITC this morning is going to be an exciting watch.
Yeah, the extent of gap up we'll get to know only at the end of the first 8 minutes. But Aditya, before we get full square to ITC, because I think we'll also get in our research analysts to talk about the brokerage views there. A quick word on the pharma names. And what are the charts saying for, let's say, a Cipla and Aurobindo or a Glenmark Life? Any of these three, not all the three, any of these three, whichever you track closely.
Morning, Niraj. So definitely there is an up move in the pharma space, and we have been seeing that for some time now. To talk specifically of these three stocks, maybe a Glenmark Pharma is something that I'll bet on. Aurobindo Pharma, mind you, has already doubled or maybe more than that in the last couple of years. And it is facing stiff resistances at upper end, maybe closer to about 1100. That is where I'm looking at hurdles. Talking of Glenmark Pharma, that is something which is still looking interesting to me on the chart setup. Can test levels of 1000 plus. Even at current levels, if one is to buy the stock, it offers a good risk to reward ratio on the downside. Supports are at 900 levels, and on the upside, stock can easily cross 1000 levels. And once it crosses 1000, I believe stock is good to go to 1100 as well. So Glenmark Pharma is something that I'll bet on amongst the three, Cipla, Aurobindo, and Glenmark, because both these two stocks have run up significantly, are facing resistances on the upside.
Right. Mayuresh, have you been following the news flow on BSE, NSE, with NSE lowering prices? Expectation would be that BSE would be forced to do that as well at some point. The stock didn't do too badly in trade yesterday. It was down about 0.8%. But let's also not forget that the only play in that listed space is BSE. So if you're an investor, would this price move by NSE have any impact on BSE stock?
So to that extent, I think the price move is probably to ensure at a certain level that volumes remain stable as far as exchanges are concerned. And the kind of additions that are purely happening in terms of demat accounts every passing quarter is outstanding for the industry as a whole. So I think it's not just the exchange platforms. I think it's the entire ecosystem that has probably done well. Brokerage firms, something like Angel One as an example, has done phenomenally well in terms of client additions. You probably see asset management companies do well as well. So I think the entire ecosystem, as this entire cult probably keeps on growing, might be expected to do well. For BSE in particular, I think the stock has moved up quite significantly. It's way above pivot levels as we see it. And therefore, anybody holding on or riding the momentum can definitely ride. Fresh investments need significant pullbacks on this one.
Okay, but you know, the hero of this morning is ITC, and we're going to get you
the heroine of the morning.
Heroine? Oh, Niraj, you are getting on trend. Okay, Queenfisher, guzzling.
Queenfisher. I mean, ever since Niraj Shah told me that it is Mrs. Market and not Mr. Market.
Absolutely. I mean, you're learning quickly. Mahima joining us with what brokerages are saying on ITC this morning. On pre-open, the stock is completely firing. Yes, Mahima.
Tamanna, so I'll start with Nuvama. Well, Nuvama has talked about the impact on passive flows. Well, they're saying that Nifty 50 is expected to have an inflow of around 538 crores and a volume of around 0.9 per day. And Sensex is expected to have 315 crores of inflow. Moving on, we have Morgan Stanley, which is rated overweight on ITC with a target price of 491. It is saying that the bad stake sale will clear the uncertainty around the stock performance, and it expects ITC to outperform. And it remains bullish on the basis of moderate cigarette tax environment, continued scale up in the non-cigarette business, and reasonable valuations. Then we also had HSBC, which has upgraded ITC to buy with a target price of 480. It believes that the ITC stock price has corrected from its peak, and it has been down 11% since the bad sales announcement. And so this implies an attractive valuation for the cigarette business as well, and it creates a buying opportunity considering even the taxation overhangs that persists. Now, I think even if no volume growth is there, cigarette business will grow, and the cigarette business EBIT structurally will grow in the range of 5 to 6%. And any further decline in the stock price could make the valuations more attractive. So this is what the brokerages are making out of ITC at present.
Okay, Mahima, thanks for that. Well, from the looks of it, 5 minutes have ended, and amidst a very noisy Samina and Nalwala, ITC is also making those noises, and it's really perking up in trade. 7% higher. Samina, you're thrilled by ITC, aren't you?
Just like my emotion right now. Yeah, 7%. It's going to provide that much-needed support to the market, I think, and I think that's going to be a big break. Most of your brokerages are very bullish on the stock. It has also fallen quite a bit from levels of 480.
But yeah, you know, I was looking at this chart yesterday. The 1 year return for ITC as of yesterday was 5%.
And year to date, it's down 10%. So it's almost recovered pretty much all of its losses.
Tell me fundamentally, though, after all the fun and games of today, the fact is that, okay, you know, your consumer segments are slowing down, your cigarette volume growth is not that great, but then chalo, that's maybe a story for another day. This morning, it's all about ITC.
Yeah, and no, but you're right, it should revert back to fundamentals, and fundamentally, per se, if you look at it, the fundamentals are not looking that bad, the valuations are probably not that worse off, as Harsh was saying, 22 times, it's not terribly expensive.
But after the 7-8%,
and hotels are doing well.
After 7-8% recovery right now, the valuations may come under question again this morning. But
did Mayuresh talk about ITC?
I think he did.
Yes, he did.
Mayuresh, you want to revisit your thesis? It's up 7%. I think the pre-openers are just settling down. But if it opens up 6-7%, would you be a seller?
I would be a seller leader. But I think the point here, again, that I'm trying to raise is, yes, valuations probably better than most FMCG players. Cigarette business still expected to throw lots of cash around. And therefore, I think the only spanner in the wheel might be their huge announcement that they've done for new products which are expected to come through in the next few quarters and years. And for that, I think the investments will be routed through the cigarette cash flows as well. So like they did it for the other FMCG business a few years back, for the hotels business as well. And as these businesses have matured over a periodicity of time, these new businesses, and as the capital gets deployed, will take time probably to mature. And therefore, I think the free cash flow on a console basis with fresh investments coming through might get curtailed a tad bit over the next few quarters. So I think that's my only concern in terms of the stagnation of earnings.
Yeah. Aditya, a couple of other stocks that had a pretty good run yesterday. One of them was Balkrishna Industries. You want to comment on that counter? It's been reeling under some pressure recently, but yesterday's recovery was worth taking note of. Do you think structurally it looks good on the charts?
Yes, absolutely. Samina, look at the volumes that we witnessed in trade yesterday, significant in that up move. So that tells that there's a good short covering rally that has taken place in the stock. On the upside, stock can definitely test its 200 DMA, which is close to about 2450. Still is 100 points up from current level. So I believe it's a good trade to take on the upside for a target of 2450 and a stop loss closer to about 2320, 2330. I believe this is something that should be on our radar.
All right. Mayuresh, I know we have to let you go, so thank you for joining us this morning. Pre-open rates have settled, and you're looking like a decent start for the opening session, courtesy ITC possibly. But that's not the only stock in focus. There's a long list of brokerage notes coming in today, but what are the top ones? Harsh has sifted through and picked those for you. Yes, Harsh?
Well, a couple of very interesting ones. One is on BSE. Of course, the price cut undertaken by NSE. Jefferies not really bearish post that price cut. What Jefferies believes is there's still decentish room for BSE to continue to gain market share. That's one. Second, what Jefferies is also indicating is that the price differential between BSE and NSE continues to be quite decent for this particular market share increase, and therefore BSE should continue to benefit. Also, the room for NSE to cut prices further is extremely limited, and that possibly means that this could be the bottom in terms of the price cuts, and neither exchanges can afford a price war. That is the other thing which they are underlining. In terms of some of the other points, they reiterate their stance of a buy on the BSE. What they are suggesting is a target price of 3,000 rupees a share, 4% up already on BSE as we speak. Well, they believe that the pricing discount continues to remain intact, market share will inch up, but the pace will moderate in terms of market share inching up. They're expecting BSE to deliver a 2.5 times earning jump over FY24 to 26, and the key risk in all of this, they believe, is the higher settlement guarantee fund. If at all that were to happen, they reiterate at 24 times FY26 earnings. That's the valuation they are pegging it at. The other one is Nomura coming out with a note on NBFCs. They reiterate their cautious stance on NBFCs. Now they believe that compliance related actions which RBI is undertaking could lead to a growth slowdown in FY25, especially the tweaking of RWAs along with all of the push with regard to unsecured that's happening. They believe that will curtail growth, that will impact growth in FY25. So they've revised their estimates both on the margin side of things, where cost of fund pressure will start to come. They believe in FY25, as well as growth pressure will increase incrementally. They believe also credit costs will start to normalize and inch up. And they believe that the repo rate cut could be a key risk to their thesis, but they believe that is unlikely to happen till second half FY25, which means that the impact of it will come in on margins only in first half FY26. But if that were to happen in first half FY25, that is a downside risk to their thesis. They like two big names within this space, or rather two relatively smaller names. One is a Shriram Finance, which is decently large, and second one is 5-Star Business.
Right. Thanks for that, Harsh. It's a whole bunch of NBFCs in focus this morning. Aditya, top of the gaining list, of course, is ITC with a pre-open gain of close to 9% already. On its heels is BSE, interestingly, a 5% up move in pre-open trade. If we do get a start closer to 2240, is there a trading opportunity there intraday?
Can be, Samina. I believe 2410, 2450 is what I'm looking on the charts of the BSE. I don't see too much of a runaway upside momentum in BSE. I believe there's a good consolidation that will take place in the stock between current levels, 2100 on the downside to about 2500 on the upside. So I believe stock will continue to oscillate between this zone. Not too gung-ho. Yes, you will get a 100, 150 point upside from current levels.
Right. Sunny, do you have an opinion on BSE, ITC? We've got 2 minutes to market open, but a quick word on ITC and BSE.
Yeah, definitely we are positive on ITC. So once this BAT sale overhang is done, the deal has already been done. I think trading at a reasonable valuation. We continue to remain bullish on the company, and I feel the fair value of the business is close to 480 to 500 with investment horizon of 12 months. Coming to BSE, again BSE, since there are many levers through which BSE can increase the market share. We need to track monthly data. So as of now, BSE continue to gain the market share over the period of since last 10 to 12 months. And in case this trend continue, then obviously the stock can be added in the portfolio. The only caveat here is that we need to keep tracking the monthly data, which is released on exchange every month on a daily basis. So in case the volume share, market share keeps on increasing due to the new product launches, we may see an uptick in basically earning as far as BSE is concerned. So continue to remain bullish on BSE, but we need to keep on tracking the volume market share.
Obviously, ITC is the big gainer this morning, but it's also pushed up the FMCG index because of its weight and volume. Quick take from you, Aditya, just before, I think 20 seconds before pre-open, top pick right now.
Since ITC is already up, Tamanna, I will stick to the trades that I had given. Maybe a DMART is something looking very interesting to me. Top trade would be a DMART for a target of 4,300 for me.
Okay, Avenue Supermart, by the way, also has a brokerage note today, which is constructive based on talking about DMART ready and that whole quick service thing that DMART is focusing on heavily now. So could be interesting. But clearly, the poster boy of the day and arguably for the week, if I was doing a week wrap, I don't think I'll start off with anything else but ITC. Unless, of course, some other macro developments happen. But 10 seconds to go today. We'll start off well, courtesy ITC, yes. The interesting thing to watch out would be whether IT can react a little bit as well or no today. So that's to be watched in, kept in mind after the tech rally yesterday and some others. But yep, well, thank you for starting with ITC. That's a great move because the Sensex and the Nifty have started off 1/3%, courtesy this big boy. If you can pull up the contributors list just to make our viewers realize how much is ITC playing a part in the Nifty up move today versus some of the others. 52 points by ITC alone out of the 84-point uptick. That shows you the extent of dominance that ITC has in the session today. And then the likes of HDFC Bank, TCS, SBI are doing okay. On the flip side, Power Grid, NTPC are not. Just get the heat map once and ITC will be right up there, so no surprises there. About 5.81% doing well. IT, like I said, starting to do well today. A lot of shorts yesterday. I think some of that covering is happening courtesy what the US markets also probably did. And a bit of flavor for SBI, HDFC Bank and Kotak Bank. So, you know, ITC plus banks is a potent force. Banks are not correcting, which is a good thing. What is not doing well? Power Grid, NTPC, Ultratech. So some of these economy-linked sectors are not doing well. And lastly, I don't see the Adani twins out here in the losers list at least, which is a good sign because yesterday they were dragging the index lower a little bit. For now, I think they seem to be behaving well. So long and short, ITC, IT, to an extent select banking, and not too many losers except for Power Grid.
What I should definitely not talk about is ITC. The only perspective being that if you remove ITC from the equation, it's not that great a morning. So you have to keep that in mind, that what you're seeing is slightly skewed in that sense. Jubilant is one stock we should talk about. BSE is the other one. Let's start with BSE. Let's start with BSE and see what's happening in the broader markets, because the broader market pain continues today as well. The PSU pain continues, but some stocks showing sparks of life. BSE is one of them because of a bullish note from Jefferies. Jubilant is another one. It's seen slightly, not too positive from most brokerages, mixed kind of views. Some of them looking at their Turkey, Eurasia business not getting the right value. So you're seeing a flat kind of trend there this morning as far as Jubilant is concerned. Gemstone Engineering, I wanted to pull up and see what happens in opening a trade, because they put out a clarification saying that their links with Zenith Multi-Trading DMCC is something which tanked JTL a couple of days ago is nothing. It's a passive shareholder, so don't worry about it. Shalby had news as well. They're acquiring 100% stake in Healers Hospital for 104 crores. So Shalby's having a good morning. Oriental Rail is what I had asked for. I'm not sure if that's the stock that we've put up. Oriental Rail Infrastructure has received a total set of orders of 1249 crores, and one of those orders has been bumped up as well. Signature Global is the other one on my list this morning, and let's see how that's opened up. Tepid with the rest of the real estate sector. And, frankly, if you take out one or two gainers on specific news flow from the bigger picture, you're seeing that trend continue of not very high volume trade or very positive trade. I think the exceptions would be, of course, an ITC and IT stocks overall, getting some steam from the overnight US rally, Samina.
Stocks like a Tata Elxsi are actually doing quite well. 2.5% on Tata Elxsi. Tata Investments, worth a mention, another down morning, another day of lower circuit. Spent weeks hitting upper circuit, and now it's spending days hitting lower circuit every single morning. 5% lower on them. Beyond ITC and BSE, a couple of other big gainers are the Phoenix Mills. It's up 3.5%. Natco Pharma is seeing a gain of over 3%. Poonawalla FinCorp is seeing a good gain. Swan Energy, after a big fall yesterday, is seeing a recovery of 3.5% this morning. You've also got Borosil Renewable up 4.5%. Electra Greentech is not doing too badly. Birla E-Strip Planners, PCBL are some of the other top gainers in trade this morning. On the sell side, Tata Investment Corp is leading the losses. Sterling and Wilson is down 5%. Keynes Technology is down 4%. Prestige Estates is off 2.5%. So Niraj talked about how the realty pack was seeing some selling pressure, and the real estate counters that gained quite well in the last couple of months are seeing heavy selling, including a Prestige this morning that trades the cut of 3% Torrent Power, JSW Energy, Archean Chemical are some of the other big losers. BDL had won a big order. Let's quickly pull up Bharat Dynamics and see what it's getting up to in early minutes of trade. The stock is flat to slightly higher, so no major gains there. But like we said, the stocks of the morning are the ITCs, the BSEs, and on the sell side, some of the... Actually, Tata Chemicals, if I can pull that one up, it'd be interesting to see whether or not this counter is settling after all those big moves that we saw. Doing not too badly, up 2% in trade is what we have on Tata Chemicals. Niraj, anything else you're picking up on?
No, largely this. I was wondering if the, excuse me, if the Bharat Forges of the world have done anything material in the session post the Class 8 truck sales, uptick in estimates from ACT, but just about a flattish move. So nothing too dramatic out here. Aditya, first 5 minutes of trade, you've seen some of the rates. Any opening thoughts on either the index or any specific stock?
Niraj, I believe markets can see a bit of a move further from here. And one stock, again, ITC, we've been talking about from morning. After opening, gap up opening, the stock did correct a bit intraday. I believe this is a good one to look at after that intraday correction. Can again go back to its highs of the day. And something interesting is look at all the tire stocks. They've been buzzing, be it a Balkrishna, be it an Apollo tire. All of them look interesting. So maybe an Apollo tire is something that I would like to bet on for intraday basis for a target of 530 to about 540 on the upside with the stop loss closer to about 500 on the downside.
Okay. What is down is Pesalo. So after the slam dunk yesterday, another 5.5% today, and Samina is right. Never mind the fundamentals for now. The overhang on real estate continues because Lodha, Prestige, etc. are all correcting. And as she pointed out, Jet Airways after the move yesterday is up another 5%. So watch out for this one as well. Sunny, did you look at Pesalo Digital and this whole story that we spoke about yesterday? But the cautionary action that seems to be coming in. Have you looked at this company at all? What does one do with this? Because it's been a rank outperformer, which is now starting to sulk.
Yeah, definitely. So the company was growing by leaps and bounds, and anyway, they had a very aggressive growth target. But I think the way our regulator is clamping down on any aspect, whether it is on gold loan or whether it is on making extraordinary margins on the loan front, I think wherever there is a regulatory clampdown, I think the stock will continue to remain under pressure. And for any NBFC, we all know that ultimately the key growth driver is the basically loan growth, and at the same time, what are the margins you are making on those loans. So in case if there is a break on any one of these parameters, definitely earning downgrade is something which we will see coming from the street. And I think right now one should stay away from the counter as of now. Let's see how a normalized business pan out. Obviously, FY25 is a year we may see a earning downgrade as far as all these companies are concerned. Maybe on FY25, then based on FY26, maybe street will start assigning value to it. So as of now, I would like to avoid this counter wherever there is a regulatory clampdown.
So Paisalo Digital, of course, is where the Delhi High Court, on the back of complaint from a borrower, has asked RBI to look into Paisalo's lending practices. They've been accused of charging 125% interest per annum. But I just also want to pull up JM Financial and IIFL Securities, because a newspaper report today saying that the regulator has asked rating agencies to, he has basically pulled them up and said, what is the action you've taken in terms of rating these companies post all of our directives? These stocks have been recovering last couple of days. Aditya, Agarwala, any views on a JM? Let me add even a Paytm, an IIFL, all of those with regulatory overhang.
It is difficult to trade for sure, because you've seen a sharp correction in all these names. Talking of IIFL Finance, that is something has come to a support area. But again, very difficult to take a call whether to go ahead and buy the stock at current levels. On the downside, 377 is a very good support. So if you already hold the stock in your portfolio, maybe you can place a stop loss closer to about 377. I will still not put my neck out and buy the stocks, be it IIFL or JM Financial, because both the stocks have seen significant downside. So I'll wait it out for some more time and see some kind of a price action on the upside. Then maybe I'll go ahead and initiate a fresh buy on these two stocks. Talking of Paytm, it's a complete avoid still. I don't believe the stock still warrants a look at current levels and go for a long trade.
Sunny, just looking at what the trend has been, and I want to look at your old economy or your core economy, your real estate, and the fact that we are now heading into election season, waiting for dates, etc. Do you think that that's what's also playing out? Real estate typically sees some pressure before the election cycle. Do you think that's going to continue? And which is why the exit from your broader markets. Remember, elections are expensive business, and they also need that kind of a funding, etc. So do you think that that's also part of the play that we're seeing?
I think anyway, election is hardly 2-3 months away. I think again, any dip in the demand will be very temporary in nature. And the way registration numbers are coming on a monthly basis, I think the demand continues to remain pretty robust. And although there may be certain pockets like Bangalore, we are seeing some water crisis, and that had led to the slightly negative sentiment that what will happen to the real estate sales over there with the water crisis panning out in Bangalore. So that one particular micro market may get impacted to some extent. But if I take a slightly longer horizon, maybe 2 years, 3 years, I think the real estate is a place to be in. Very robust demand we are seeing. And on the top of that, in case we see a rate cut coming in the second half of the calendar year, then again, real estate will be one of the key beneficiary over there. So, but again, would recommend to ride this story either through a larger names like DLF, which has got a mix of real estate or residential as well as commercial portfolio. And at the same time, guys like Phoenix Mill, which is again a play on a urban consumption theme. And one can ride this theme through various real estate ancillary companies like Kajaria Ceramics, Century Plyboard, wherein I feel that after a long time, we are seeing that there is a probability of margin expansion which will come through in FY25 and FY26.
All right. Just a quick word from you, Aditya. Would you be looking at any of these plays in real estate to pick up right now at these levels?
Not really, Tamanna, because if I take a look at the historical data and if anything is to go by it, after every year of outperformance in the real estate, the next year usually it's an underperformer. And as you mentioned, election year, post-elections, usually real estate corrects. And if I take a look at all the real estate names, keeping aside the historical evidences, the chart structure do look overbought at current levels. Most of them, if I talk about SOBA, if I talk about DLF, if I talk about the Prestige Estates, most of the real estate packs are looking overbought at current levels. So I'll wait it out for some correction on the downside. Maybe after elections, if the stocks do correct 10, 15% or 20% from current levels, then I can look at initiating fresh long. I'll completely avoid real estate pack at current levels.
All right, avoid real estate right now. You see a downturn after an election. PSU stocks having another bad day. That index is down nearly 1.5%, 2%. Power Grid, NTPC, NLC, all 2.5% down. And that's what's really hurting. But we're going to focus in the next segment on some of these companies that have really run up and look at what their future potential is. Meanwhile, Aditya, Agarwala and Sunny, thank you so much for joining us. We'll take a very, very short break on India Market Open. On the other side, we're speaking with Geeta Kapur, Chairman and MD of SJVN. Stay tuned.
back. You're watching India Market Open, and a company in focus this morning is SJVN. It's been on investors' radar for the last few months. The counter itself is up about 45% in the last few months. Well, what's going on with this hydro major? Geeta Kapur, Chairman and Managing Director of SJVN, joins in. Good morning, Ms. Kapur. Thank you very much for joining us to talk to us about what's going on with the company. There's been a lot of activity. Good morning. Ms. Kapur, it's Samina, and there's been a lot of activity around SJVN in the last few months, and it's been in the news not because of hydropower project wins, but solar energy. You've bagged a number of orders from a number of states. You want to give us a sense about how that business is playing out, and what does the order flow from the solar business look like at this stage?
Right. Just a small introduction of SJVN. You rightly said we started as a hydro major, but with our wholly owned subsidiary, that is SJVN Green Energy Limited, we are pursuing our renewable portfolio. As on date, in our renewable portfolio, we have about 7.1 gigawatt, out of which 404 megawatt installed capacity as on date. A good 2 gigawatt projects are under construction, and about 4.9 gigawatt projects are under various stages of development. Up to the year 2030, we propose to add at least 1.5 to 2 gigawatt of renewable energy every year. And I'm very happy to announce that recently we added 4 projects, 1 in hydro and 3 in solar. We added Netwar Muri 60 megawatt, and we added about 215 megawatt capacity in solar energy. It was Gurra 75 megawatt. We had Gujray project 50 megawatt and Raganesta project 100 megawatt. So we are very aggressively pursuing our renewable energy portfolio, and as of date, our hands are full, and we propose to commission at least 23 gigawatt of renewable energy by the year 2030.
Right. Ms. Kapur, thank you for extensively explaining to us about the recent order wins and where the focus of the business lies. You said that you will complete a chunk of those projects by 2030. When can we expect to start seeing this maturing or converting this into your top line, your revenue? Would it be as early as this quarter, second quarter? Give me a sense of timeline, because a reflection of that on your top line, if you can quantify that, that would be great too.
Stated, I'll just repeat that. One is that 404 megawatt we have installed capacity as on date. In the year 2024-25, we propose to add about 2 gigawatts. And you will see, even in this quarter, that is by the end of March, hopefully we will add another 90 megawatt, that is Omkareshwar floating project. So every year about 1.5 to 2 gigawatt of projects in our renewable energy portfolio will get commissioned. And that would take us to about 23 gigawatt by the year in 2030. So in terms of revenues, you will see the revenues flowing in from 2025, 26 onwards, and every year.
Mrs. Geeta Kapur, very good morning. Tamanna here, and absolute pleasure to speak with you. Now, March has been an exciting month for SJVN. You've had solar power, all solar power orders from the states of Rajasthan, Gujarat, Maharashtra, and Jammu and Kashmir. I want to understand whether you see this space continuing. Tell us a bit about these projects, and how do they change your mix of hydro versus solar?
Right, I'll come to that. See, as you said, March has been very exciting, so true. In this Q4, we've added about 2,252 megawatts. We won award letters for solar projects, that is 2252. The major being with Rajasthan Urja Vikas IT Services Limited, 600 megawatt, 500 PUA, which is power usage agreement, and 100 megawatt PPA, that is power purchase agreement. 500 megawatts we propose to supply from our Bikaner project, that is 1000 megawatt solar power project to be installed in Bikaner, Rajasthan, which we are expecting to commission by September 2024. And 100 megawatt we propose to add from our solar project. We propose to install a solar power project on the land available with Sambar Salt Limited, and this will be commissioned in the year 25-26.
But so if you can give us an idea of whether you expect the space to continue. This is 4 states.
Yeah, this space will
Solar
continue.
power is a focus for a lot of these states. So what is the kind of order inflow you're expecting?
I'll get to it. See, as you may be aware that Government of India is targeting 500 gigawatt of solar projects, 500 gigawatt non-fossil fuel energy projects up to 2030. Out of this 500 gigawatt, the scope for solar is around 300, right? So out of this 300, SJVN is aggressively pursuing and tapping every opportunity that comes our way, right? As I said, as on date, we have a total project portfolio of more than 56,000 megawatt, out of which the solar energy is around 7.1 gigawatt, right? And this we are pursuing very aggressively. And even in this quarter, we've added about 2,252 megawatts. And this will continue. See, one is this Government of India target of 500 megawatt from non-fossil fuel energy. Even the National Electricity Plan proposes to add more than 6 gigawatt from solar energy. So, as far as the players in solar energy sector are concerned, SJVN proposes to bag every opportunity that comes our way, and we are aggressively pursuing it. And there is enough scope if you look at Government of India targets, and even if you say that Government of India targets net zero emission by the year 2070. So the shift to solar energy in terms of policy initiatives is massive, and we are very confident of tapping all the opportunities.
Ms. Kapur, just one quick question. We've talked about solar quite extensively, but we can't take our eyes off your hydro business as well, because you're still smaller than an NHPC, but still much more efficiently run, if I may say. Can you share with me what is the average plant load factor and what is the plant availability factor currently? And would that continue to improve profitability going into the next couple of quarters or FY25?
Right. See, if I talk of hydro, as on date, our total installed capacity is 2,377 megawatt, out of which 1,972 megawatt is hydro. Two major projects, one is 1,500 megawatt Nathpa Jhakri Hydropower Station and Rampur Hydropower Station. For the past more than, I would say, a decade, have registered more than 100% plant availability factor. In a layman's language, that the plant has been available always for taking whatever scheduled energy is expected from us. As far as plant load factor is concerned, it is in hydro, we have in the range, you can say if it is 45 to 50% is the PLF load factor, if we conclude in terms of NGHPS production and RHPS production. So, and in the hydro business, tomorrow we are looking at the country's largest hydropower project, which has been allocated to us. SJVN has started working on it, and manpower is in place. This is 3,097 megawatt Italian project in the state of Arunachal. We are very happy to share that on this basin, we have been awarded projects more than 5,000 megawatt in Arunachal Pradesh.
All right. Thank you so much, ma'am, for speaking with us. That was an exclusive interview with the management of SJVN. Let's take a quick look at the stock price before we go into a break. Under a bit of pressure, like a lot of companies that have run up on the back of government capex. Will this recover post-election is something we'll have to see. Before we go into the break, I just want to take a quick look at what's happening with ITC. And let's pull up the chart of Nifty contributors. ITC has been the stock of the morning, about 6% up. And really the wind beneath the wings as far as the Nifty is concerned, contributing about 50 points at this level. Quick break. On the other side, we're speaking with Rahul, Mithal, Chairman and MD of RITES. Stay tuned for that. talking about RITES this morning on India Market Open. An interesting company, Railway Consultancy, has had a great run-up, but recently a bit of pressure coming in. What's the outlook looking like? Is that going to pick up again for the space post-elections? To speak on all of this and more, Rahul, Mithal, Chairman and Managing Director, RITES, is with us on the show. Very good morning to you, and thank you for speaking with us today on NDTV Profit. Now, I want to start with what your Q3 looked like, where you had on an average an order a day, a total of 612 crores. Has that petered out in Q4 before an election season? What is the outlook there?
Morning. You see, we have a unique place that maybe we are the only infrastructure consultancy company, whether as a PSU or a private company, which does infrastructure consultancy across all areas of infrastructure, except maybe oil and natural gas. So whether it is rail infra, airports, ports, highways, etc. And that's the very reason which our mission or our milestone of wanting to be a one order a day company. That dream got realized in Q3, where we could get 100 plus orders totaling to about 612 crores. And considering that we have a presence both in the domestic and the international arena across all sectors, the Q4 trend is continuing in that. So I would consider that over a period of time, on a 6-month or an annual basis, we would definitely be able to maintain this trend of a one order a day company.
I think Q4 will also see one order a day. How much of that is going to be export oriented? Because you sort of, after a lull of 4 years, started to get international orders, Mozambique and Bangladesh, only recently. Do you see that building up and contributing to margins which have been under a bit of pressure?
Yes, you're very correct. That was one of our biggest challenges, that in about 2 years of COVID and post that about a year and a half or so, one of our major streams of revenue, that is export of rolling stock, we didn't get any order. And that was a major breakthrough which we had again in Q3. We got our first order, as you said correctly, of about 300 crores from Mozambique. We've been declared L1 in a Bangladesh order for 200 coaches of about 900 crores. And the way the things are progressing in this sector, we have bid for a number of opportunities across various geographies. And I'm sure that these will mature in the coming quarters into some orders. And these orders, as they start generating revenue in the coming FY, these export stream of revenue being a high margin stream of revenue, I'm sure that we're going to be able to recover the lost ground that we have had in this FY.
Hi, Mr. Mithal. It's also Samina joining in. A follow-up question to your orders in Mozambique and Bangladesh. When can we expect that to mature into revenue? Is there a possibility this could be seen in the next financial quarter? And also, I believe the order in Zimbabwe, there was some financial turmoil there and hence there was a delay. But can we expect closure in the last quarter of this year there too?
Yes, you see, the Mozambique order is for 10 locomotives, and normally locomotives take a longer time for manufacture, something from about 9 to 12 months. And the revenue gets booked when actually the locomotives gets shipped out. So I would definitely consider that by end of this FY 25, the revenue from this order would start maturing in. The Bangladesh we've been declared L1 in a global tender for 200 coaches. And we are looking forward to that getting converted to a finite LOI in the coming weeks. Coaches by nature have a relatively shorter time of manufacture. And even if this matures into an LOI in the coming weeks, it would definitely be able to contribute revenue in the latter part of FY25. As far as the Zimbabwe order is concerned, yes, this has been about a few months now where the MOU, the agreement was signed. However, we have not added it to our order book since, as you correctly said, there were some funding issues at their end. It's moving in the right track. We've been in constant touch with them, and we are looking forward to that also becoming a finite order in the coming quarter.
Just one point on a risk to your margins, Mr. Mithal, is coming from competition as more and more companies are coming into the space. And I want to understand how you see that headwind and how you will overcome it while increasing the share of your consultancy business, which is, the highest in your margins.
Yes, for sure. You see, they're all across the various, I have about 13 different verticals across various sectors of infrastructure. And in the last few years, across all these verticals, there has been a more and more shift towards competitive bidding. In fact, in the last few months, roughly about more than 2/3 of our orders are on a competitive bidding mode. So while we take this as a challenge, but also as an opportunity vis-a-vis many of our peer PSUs who maybe are not geared up to tackle this competitive, environment. Yes, but then definitely these have an impact on the margins as the figures would show you quarter on quarter. But yes, what we are aiming is that we get more and more orders, and that's the very reason of our wanting to stabilize on one order a day company, so that at least in terms of absolute EBITDA, you see a substantial growth, even though the margins show a little stress.
All right. Thank you so much for speaking with us. That was the management of RITES talking about sticking to their one order a day. But let's bring back focus on the markets where the broader markets are definitely cracking. Pull up the small cap, the Nifty small cap, micro cap, mid cap, all of them doing fairly badly. The Nifty itself holding up to some extent because of an ITC, but in the rest of the space, a fair bit of pain. Paisa low again, about 8% down. Tips, Anand Rathi, HCC, Jupiter Wagons, some of the big losers this morning, or at least from the micro cap index. Forging doing okay based on that data. Yeah,
and even some of these PSC names, Samina, I think there is some pressure very obviously. So look at a Bharat Dynamics. They've won an order, but the stock is down 5% in trade. HAL, which has again been a trader favorite in the last few weeks, is seeing a big crash. The stock is down 4.5%. REC as well, that was holding itself together, is seeing a big cut. SJVN, RITES, the whole host of public sector undertakings are seeing tremendous selling pressure. Small cap index is down 1.8%. The mid cap index also seeing a cut of 1.5%. So the carnage is there. It's just not obvious from the Nifty itself, but the broader market's definitely seeing a lot of pain, and this is literally in the first few minutes of trade. And the Nifty also holding up largely on back of ITC this morning. But with that, it's a wrap on India Market Open. Thanks for watching. Up next is Talking Points, so stay tuned.